All right. We have take number 2. Sean Ziem, the Connection Machine, aka the Insurance Doctor. Wanted to jump on and see if we can get Ryan on this time. Let's see if we can get the new live happening, because without the lives, nobody can get educated. So it's important that we get out of your comfort zone and make things happen. If some of you are a little afraid to get in front of the camera, it's something that I enjoy. Hey, I started only about a year ago, over a year and a half ago, sorry. Let's try this again, Ryan. I'm adding you, Ryan. So you should be able to. All right. Let's get this thing rocking. I think we have it now. Hopefully you have a headset and we can have a clarity, and we're not going to have some reverberation and some echoing. I'm keeping my fingers crossed. We're waiting for Ryan Walsh from Hard Money Bankers. Going to have a conversation with the Connection Machine, aka the Insurance Doctor. We are waiting on adding him to my screen. It looks like it's happening. Oh, here we go. Here we go. Will this be working here? Let's see. Can't bring Ryan on camera. Why? Let's try this. We're looking for a connecting. Let's see. I sent you a request. I don't know what happened. I was already getting you on, and you sent me a request, and it getting malfunctioned here. Do you see it, Ryan? Add. I'm adding you now. Oh, let's see. This ain't adding. I don't know what's going on here. Let's take this off. Ryan, hit the request button again. Go ahead, Ryan. Hit that request button again. Did I lose you? There, here we go. Let's see. I'm adding you. Maybe this will work. Hey, Lori, how are you?
Oh, we got it.
Oh, man. Look at that.
All right. I hope it's not. Shoot, is it reverbing?
No, I hear you're fine. I think you're fine.
All right.
We got it finally. Gee, it was like every single time that I put you on, or I was bringing you on, then it popped up that you wanted to get on, so I would hit it and it won't allow me. So hey, that's what happens when we
I
are.
have no idea what I did differently, to be honest, so I don't know why it worked now.
Hey, it's fine. The sound is good. Jennifer Solomon, thanks so much for sharing that information, because yeah, we want to make sure. What's wrong? Oh, I know. I have Natalie off camera
Hey,
trying
Natalie.
to multitask, but let's get into it, man, because
Yeah.
we've been trying
Sorry
to
for
do
the
this for
delay
a
there.
while. I'm representing you here, and what are some, before we even get into like the business stuff, like let's get the people to understand who you are. What are some hobbies that you do, right? You don't always work, right?
No, I'm always working 24/7. So actually my background, I'm a bit of an entrepreneur. I was raised by an entrepreneur, and that's basically, I'm in business now with my one brother here doing lending. And then I have another business with my other brother, where I am a developer. Um, and yeah, so I'm all over the place. So I'm always working, but I love it. So it's not really work, I do have that scenario where you love what you do what you love, right? So I'm very fortunate in that way. So otherwise, yeah, when I am relaxing, I'm doing some video games, maybe some volleyball, that kind of stuff. So
Right,
I
right.
am actually a normal person outside of work.
And you're always networking as well. Like I always like to, when I bring people on, we have conversations. Like you think networking is key to your business, right?
So
We have him frozen. We finally have him out there, but we have him frozen. There he is.
back, okay. All right, sorry about that. So the question was networking. Yes, so we always say we are marketers first and lenders second. And you can honestly apply that to any business, even for my other business that isn't lending, marketers first, business next. So networking is more than just essential, it is the business. So, I love what you do, Sean. You can, I mean, I'm really, really impressed by what you do because, and don't take this the wrong way, insurance is a tough sale. It's a
Right.
tough, it's not an easy one to do out there, and you do it really well. So if you can sell that, I mean, you could be a hype man for like the UFC or boxing or something, John. You're awesome at that.
No, I
So
appreciate that.
yeah,
I
yeah.
mean,
So
it
mm,
is like our businesses, no matter what, insurance is boring, right? If you think about it, it's boring. It's not like you need it. Everybody needs it,
everybody needs
but
it.
it's not like something you can see. Like a real estate agent has all, like they can walk around the house and like show all
Right.
they're selling
Make it look sexy.
something, a substance. We don't have substance in
Right.
insurance, and even in lending, there's no a substance. You just have the end result. You got approved, and you can buy that house or the property or what have you.
Exactly. I
So
mean, that's where I think somebody like yourself or me, our service is so important to keeping the business coming. So the networking, the marketing, that's important to bring business in, but our service from there is what keeps the operation going. And I've done business with you, and you definitely have a similar mindset to us. Customer first, do everything you can to get that customer satisfied, and that's just how we operate, and you operate like that, and that's why we're going to continue doing business with you. We like doing business with you, so yeah.
no, we appreciate you, and I'm gonna give John Whartonby, my partner, is on. Give him a shout out. Nobody wants
Absolutely.
insurance, he says. Yeah, nobody wants to pay for it. That's the
Right.
problem. It's always that extra thing, like, oh, I need this. Well, I had somebody today. I need auto insurance, like today, like now. Like,
Yeah.
well, you could have called me, yesterday or 2 days ago. Not everything doesn't have to be now. It could be done in a process, but that's just how it's all sold. That's why I do so many different videos to educate people, because without education, people, I mean, hard money lending, let's get into it. Like, what is that all about? Like, you can go for a mortgage and there's all
Yeah.
the documentation. I'm sure the same thing with you, but you're
Yep.
dealing with investors and more risk involved, I would think, right?
Yeah, it's a lot of risk on us. It's real risk. That's what a lot of people don't realize sometimes. We're privately funded, so it's not monopoly money to us. Meaning it's literally my money, it's my family's money, it's my friend's money. So super, super protective of the money first. That is always our number one rule: protect the money first, make money second. And I mention that because a lot of times people will come to us and say, hey, why can't you do 100% financing? It's a great deal. I'm a great borrower. And truth is, we don't want to be in a position of risk, even though that's what people think of when you think of hard money. They're lending out money. That's not how we view it. We view it as a zero risk situation. That's when we lend with you. It's probably better to look at it as hard money leverages your money or collateral. You know, you may have other investment properties. That's what we're used for. We're not used for taking a risk for you. That's not what we want to do, and that's not what we will do. We don't take your risk. That risk is on you. You want to buy property, you want to flip it. We're here to help you with that, but the risk is still in your hands. That's what we're here for, and that's what hard money in its essence is. We're not free money. You know, we're not just going to give out hundreds of thousands of dollars, and that's not just us. That's any lending company, whether it's a bank or not. You have to realize that we are a zero risk business, even though in the front it seems the opposite of that, where it's a high risk business, and it is, because if things go wrong, it comes out of our pocket, right? I mean, it's a lot of, it can be very costly when things go wrong. So that's where the risk is. But in the deal itself and in getting everything ready for a loan, it's zero risk for us. That's how we always approach it. Yeah.
Now, are your products usually on a traditional home, home you're doing a 30-year mortgage or a 15-year mortgage? How is it structured on the hard money side?
So typically when you're dealing with hard money, you're talking short-term loans. So you're going to be looking anywhere from 6 months to maybe 24 months. We land in the middle. We like to do a max loan of 12 months. If you talk to us, you need a little bit more ahead of time, we can go 18 months, but 99% of our deals are 12 months. And that's honestly what the borrowers want anyway, because it's a high interest rate when you're dealing with hard money compared to your long-term lenders, your 30-year lenders. So you don't want to be in that loan for too long. You want to be out as soon as possible. And when you're using our money, you're typically using it for a fix and flip, meaning you're buying a house, fixing up, and selling it right away. So you're not looking for a 30-year yourself.
Yep.
Now, you may be looking to fix it up and then rent it out, which is totally okay. But a lot of long-term lenders will not look at that property until you fix it up. So you use our money to buy it, fix it up, and then essentially you're refinancing it with them. They will pay us back to get you out of that high interest rate loan. So short term is the quick answer to your question there, Sean.
No, that's awesome. And I see some people jumping on, and we appreciate everyone that is watching. Please put in the comments below any questions you might have, where you're watching from. If you're involved in a business that we could all kind of collaborate, please put it in the comments below. I have Willie Delinko.
So, Willie,
would there ever be a time where hard money bankers would have to change their perspective on their risk due to the market change?
That's a really good question, Willie. And the answer is no, not for us. And I'll go into that. So we like to look at ourselves as very defensive lenders. There's people that say to me all the time, like, how do you make money in the market right now? Because a lot of lenders right now, they're in a price war. And I don't want to get too involved in that right now, unless you guys want to, I don't care. But basically, you'll see rates out there 12 and 2, and you'll see other lenders saying, well, we're 10 and 1, and it's all the way to the point of we're 8 and 0, meaning 8% for a loan and 0 points. So that's very risky for them. And that's considered very aggressive in the lender's world, right? We haven't moved in 11 years. So 11 years ago, if you were getting a loan for 16 and 6, that was considered cheap. Most people don't realize that. So we've been 14 and 4 for 11 years. And we haven't moved because that is our risk tolerance, and we're not changing. We would rather do less deals than put out more risk.
Right. Must have got a phone call. Reminder, make sure you're always on airplane mode. Are you on airplane mode?
I am not. That's exactly what's happening. I have to turn the phone off. I'm sorry.
No, that's okay.
Yeah, so basically, we'd rather be doing no business than putting our business at risk. That's just our mentality. We're not going to risk our friends and family and personal money. That's it. We'd rather not do business.
You said 14 and 4. For those that are watching, what does that mean, that terminology?
Yeah, sorry. Sometimes I forget.
No, it's okay.
So basically, if you're in a 12-month loan, your initial rate with us is going to be 14%, which means you're going to be paying monthly interest-only payments. So For as long as you are in that loan with us, you're paying about 1% back to us every month. And then after 12 months, that's total is 14%. So with short-term lenders, hard money lenders, you'll hear them give you rates. We're 12 and 2, 14 and 4. And the 4 means percent at close. So basically there's an upfront cost at closing that you pay your lender. It's basically paying us for our service right away. And then the rest is payments over time to us.
Gotcha. Right.
Yeah. So 14 and 4 is considered on the higher side right now. It's really not, especially when you look into how businesses work here. But we totally justify our rates. You know, it's not, we don't just do the same product as everyone else. And this is a little sales pitch here. I'll be real quick and then I'll be off of it.
No, this is perfect.
We're a no-doc lender, which means, since Natalie probably doesn't know what that means, I'll explain what that means. It basically means we don't need your W-2s. We don't need your bank statements. If you've ever gotten a loan before or applied for one, it is a heck of a process. There's so much documentation they need. A no-doc lender doesn't need that. It's something that existed very largely before the 2008 crash. Everybody thought it went away because they said it's way too risky. The thing is, we're so, like I said before, defensive. We're so good with our numbers. We can afford to be a no-doc lender and still put out good loans. Honestly, I'm looking at maybe 30 deals a day. I'll maybe say yes to one of them. That's how, you know, challenging it could be to find a good deal and then for you to also have the leverage that we need in order to go in.
Right.
So,
gotcha.
Yeah, so we're just very defensive, and that's how we can be a no-doc. And then the next thing is we can close in 24 hours, which is insane. That doesn't exist in the hard money world. Most people say, I would never need that. And I say, okay, call me when you do, because you just don't know what the scenario is that requires that situation. It can be your credit score changed by 20 points a week before closing, and your lender says, sorry, we can't do it because we're restricted by a bank. As soon as there's a change there, it's going to take us 2 weeks to reprocess the paperwork, right? So stupid things like that can kill the whole deal for you. And you end up giving us a call and saying, yeah, you know that scenario I thought would never happen? It happened.
I need you now. It's a solution to a problem. That's what that is.
Exactly.
For sure.
Yep. So, and then the other side of it, I mean, I actually have a video explaining how important so not only are we fast on closing, that 24-hour closing, we're also super fast at getting draws out. So if you've ever done a loan before, you're probably going to be put on a draw schedule. And what that is, it means, so let's say you bought a house for $100,000 and you needed to do a $50,000 repair on it. That $50,000 sits in an escrow account with your lender. And as you complete the project, so let's just say you put up all the drywall, or maybe you did the electric. You say, okay, it cost me $5,000. Can you give me that $5,000 from the escrow account? It's not just an instant transaction there. The lender has to go and send somebody to inspect your property. Then they have to send back the report. Then it has to go back to the bank. The bank then has to approve it. This can take 5 to 10 days on your average draw, right? Ours is 0 to 3 because we don't have to do all that. We do send an inspector to send us back the report, but then it comes right to your direct lender, which is me or my partners, Ian, Jay, and Chris, and that's it. So that's how we can get you to the draws in 0 to 3 days. I mention that because it's really, really important to understand what 0 to 3 days means versus 5 to 10 days of keeping your project moving. Because when you have, your average project's gonna have 5 draws. That is the magic number. People think they can do it in less, they think they can do it in more, they end up always doing 5. Really, just plan on 5.
Right.
So that's over 5 draws, you're saving about 5 days each time. That's a month's worth of time that you just saved with us versus another lender. And if you value your time and how much money you're saving in that, it can be, you could be basically be making an extra 10 grand just by using a fast lender. So whether it's not us, if you're using a slower lender, go find a lender that's faster. And it's basically equivalent to saying, would you take a slow contractor? Are you okay with that? Because you know how much that costs you. It's the same with lending. People just don't always factor it in because it's more spread out over the course of a project. And I would say make sure you include that in your calculations.
We found out, John and I, we asked for requirements for the lenders for those builders risk policies that we're writing,
Yeah.
and yours are the best we've seen so far. You might now, after seeing this live, you're going to be like, oh, maybe we have to change it. But it's very simplistic. It doesn't require a lot from the borrower. Some other companies are requiring excessive amounts of liability when most of them should have a general liability policy anyways, or a commercial liability policy, because they're contractors or general contractors anyway.
Yep.
That's what making the policy so much more money. But we appreciate what you're doing and allowing that. What states are you lending in right now?
Good question. So right now we're New Jersey, PA, Delaware, Maryland, Virginia, and DC. So basically from DC to New Jersey. We can do refis in New York, but we can't do full acquisitions yet. We're working on it. Believe me, we want to be in New York. There's
Right.
a lot of money to be had there. But the legal, everything changes in New York. They have their own system basically. So we're working on it. But until then, New Jersey to DC basically.
No, that's awesome. For those that are watching, if you have questions for Ryan about hard money lending, please drop it in the comments below. Anything on insurance, drop it in the comments below. I see some of you jumping on, and some of you have made a couple comments. I haven't had any questions yet, except the one we had earlier. If I see Michael Oates on, Antonio, Stuart, we appreciate you all. Hit that like, the love, the wow button, and the share button. Antonio Frattallone's from New York. Right now, Ryan can help you. Can't help you yet, but down the road, possibility.
Absolutely.
What other ways are you marketing? Are you on social media? Do you believe in video? I believe as well, right? You do, and your brother do a lot of educational stuff, which is very key for today. And not many lenders are doing what I'm doing and what you're doing, right?
Yeah, and I mean, part of that is how focused we are on the business. I think a lot of lenders, and it's not to knock on them, they just have many avenues in their business, which is some of them do flips themselves, right? So it's tough. Like marketing is a full-time job, as you know. Like I see you on here every day, and that is what you have to do for one business, right?
Right.
So they may not be able to grow their their lending business as much as we can, but they'll have other avenues bringing in money, which is totally fine. But I mean, social media is by far the best bang for your buck right now. Like nothing's even close. So if you're not on it every day, like I mean, honestly, just follow exactly what you do, Sean. I'm not just saying that. Like you, to the T, you're doing it perfectly. You're on every day. You're on at the same time. You're doing it way better than me. You post content every day. It's great. So yeah, I can't for any business at all. I can't recommend social media enough as a main source of marketing. But you should always be doing more than just social media. I mean, we like to say you have an octopus. Your octopus, a marketing octopus for you, right? So you just imagine an octopus always crawl. You know how octopuses crawl? Like they like glide almost.
Mm-hmm.
But it's really because they're always moving one arm at a time. It's just they're constantly moving, and that's how marketing works. Because when you put a campaign out, let's just say you're doing the old school mailer campaign, right? Like physical mailing. You start that, you're going to get results back. It's going to pull you, right? But while that's happening, you need to be working on another arm and getting that going out. Maybe social media is one. Maybe going to networking events is one. Maybe email blasts is one. These are all arms that you want to be moving all the time. And over time, you'll cut out some arms or refine some, and figure it out what works for you. But you never want to do just one, and you never want to. So the reason why you don't want to do just one is because everything has like a life cycle, right?
Right.
So if you do that email marketing campaign, and the first time you do it, you're like, oh my gosh, we got so many results. We just need to keep doing this over and over and over. The second time you do that, your results aren't going to be as good. People have seen this already. You've already hit those people. So you almost let that refresh itself while you're moving another arm. So it's being persistent. Persistence is probably the key word when it comes to marketing, and then having your different avenues and consistently doing. and not just a one and done. I mean, you know this better than anyone. You don't just do one live a month, right? You're doing this so often, because you don't get true data, you don't get true results from just doing it once. You need to be doing it. I mean, honestly, 6 months to a year.
Oh
That's
yeah. Yep.
that's how long you can determine if something's worth it. And anything before or after, before that, it just isn't enough data to tell. Even if it's really good at first, it's still not enough data to tell you, is this consistent and can I keep applying this over and over?
Right. I mean, the matter of the time, the consistent, consistently putting out content. Yeah, it takes at least. It took me 6 months. I saw major improvement on leads and closed business and everything else. But yeah,
Yeah.
people will watch, and it's flattering, and they kind of will take and implement some of the things that I'm doing.
Yeah.
And they're like, well, some things they're not. It's not happening yet. And I'm like, it doesn't happen in a couple weeks. It takes months,
Months.
and you have to have that persistence to allow yourself. This is gonna work. And I've talked to a number of people, and those that have done it are like, Sean, you were right. It takes some time. I'm like, I know it's gonna work. I'm not a guru, but I know it works. And
Right.
it's just a matter of time. You keep plugging away, and then all of a sudden you can't stop. Like I was doing, videos that I would meet with people, and I haven't had the time. So I've been really gearing up more Facebook Lives, which you can hit anywhere. You could be in any location, do a live, and make it happen. And the biggest important thing for those that are watching, you have to tease it like we were doing. You have to have, like, in a day, you have to drop a post. So we're going to have a Facebook Live.
Yep.
You have to do a quick little video. Hey, I'm going to be going live. So people are seeing it. That's the mark. So you get people that are going to come and watch your lives. Otherwise, nobody. I mean, we've been having between 15 and 20 people jumping on and off today. And Natalie noticed. And otherwise, you won't have anybody, which is not a problem because you'll have the replay. That's the benefit. It always is working for you.
Absolutely. And to add to that, when you're first starting, it doesn't matter if you have 0 viewers. You complete the whole process, get the practice in, get the repetitions in. And that way, when you do have that 1 viewer, when you do have that 2 viewer, you're going like it's a live show already. It's not, you don't panic when you start getting viewers. And that way, 15, 20 now, another year from now, you'll be getting 100. And it's just like, it's no different than what you're doing right now. The numbers are just increasing.
And then if that's why I always ask people, whoever are watching, share our videos, because the more shares you get, then I'll share it into different groups, and then you'll have more traction after the actual live. So that's the key thing for many people, to keep that in mind. Don't stop. Keep plugging through it. It'll happen. It'll definitely increase your business for sure.
Yeah, to give you a baseline finance, when we first push into a business, we're spending over 50 to 60% of our revenue on marketing alone. So, if you're whether it's new to flipping or new as a realtor, don't pocket anything. Put it all into marketing. Just put it all right back in. That would be my 2 cents from having a couple companies. Beginning is the hardest, and just put as much money as you can into it via marketing.
Because it's lead generation at the finest. You have to continue working and pushing. Otherwise, I mean, you see it, you have 30 deals you got to look at to get one. If you don't have those 30, you're going to be in trouble, because it takes a lot of opportunities to review to take a chance on somebody. That's the important thing.
Exactly. Keep that phone
I know
ringing.
we're running out of time. I want to make sure you put in the comments, your website. But Ryan, give us a little 30-second, and then give us your cell phone number, and then we'll end and get into our, get back to our lives and get more business in the door.
Sure, yeah. So quick 30-second elevator speech. We are a no doc, no appraisals. That means we can do share sales and auctions. Hard money company for residential and commercial. We can go up to 65% of the ARV. Anytime you need a 24-hour closing, you send us the lead, we'll send you back a quote. And if the numbers work, we move forward. It's that easy. You can reach me at 201-345-1036, or email me anytime at Ryan, R-Y-A-N, at hardmoneybankers.com.
It's right there.
Right there. Oh, yeah. And whoever asked the question, email me your address, and I'm going to send you this cool color changing cup.
That is cool. Very cool.
So,
Awesome, Rye. It's always been great. I appreciate you coming on and educating our audiences here. And definitely, our next event is June 24th. It's a Monday. We're doing a different day. Definitely come on by. If you have any buddies that want to, introduce, or you have any agents you want to get in front of, have them come by, investors, etc. But the Public House 46, for those that haven't been there, you got to come from 6:30 to 9, have a free drink, have some food, and connect with a variety of people, for sure.
yeah, Sean doesn't pay me to say this, and it's an awesome event. I promise. You'll have a great time.
Awesome, Ryan. Well, go get them. I'll talk to you soon. I appreciate you.
Thank you, Sean. Much appreciated. Have a good one.
Take care, Ryan. There you have it, guys. Another Facebook Live with Ryan Walsh from Hard Money Bankers. If you guys need any builder's risk policies from 3 months, 6, 9, and 12, we could definitely take care of that. If you are our buy and hold, we have those tenant fire policies we can take care of as well. And if you need homeowners, auto, flood, general liability, workers' comp, and commercial auto, also life insurance. If you're an investor, you need to have life insurance. Make sure you secure yourself and your family. God forbid anything happens to you. Thank you very much for tuning in, and we'll talk to you next week. We have 5 Monday through Friday at either 1 o'clock or 12 o'clock. Make sure you take a look at the marketing, and I'll see you soon. Have yourself, and Natalie says it, have yourself an awesome day.